Known as the Oracle of Omaha, Warren Buffett is known around the world for his successful investments that have seen him acquire a net worth that runs into billions of dollars. He has been a beacon of hope for many aspiring investors, and his journey to billionaire status is every bit as inspiring. Number 10. He bought his first investment at 11. Warren Edward Buffett was born in 1930 in Omaha, Nebraska, to parents Howard and Layla Buffett, and was coined as something of a math genius. He could add up big numbers in his head, which became a huge part of who he is today. Warren Buffett started his business ventures early on in his childhood. At just 6 years old, Buffett earned his first money selling gum around the neighborhood. He sold juicy fruit, spearmint, and double mint around his neighborhood on a tray, which he sold in packs of 5 sticks for a nickel. He remembers refusing to sell to a woman that wanted just 1 stick. "We don't break up packs of gum," he remembers saying. "I mean, I've got my principles." But soon after, Buffett found that selling Coca-Cola increased his margins, and would go door to door in the summer selling the drink. He even sold it to people at the lake when his family vacationed in Iowa. At 11, he made his first investment by purchasing 6 shares of City Service preferred stock, 3 of which were his and the other 3 for his sister, Doris. These 6 shares cost him $38 each. The stocks he invested in fell to $27 but shortly climbed back up to $40, prompting both Warren and his sister, Doris, to sell their shares. Soon after, the stocks climbed up to $200 per share. Warren is said to have regretted that decision to sell so fast, but he also said that it taught him patience when it comes to investing, a discipline he has carried with him to date at 92 years. Number 9. He had a side hustle at 13. Warren Buffett was earning when he was 13 years old, working as a paperboy. He would wake up at 4:30 in the morning to deliver copies of the Washington Post. This is where he began his side hustle selling magazine subscriptions and calendars to his newspaper subscribers. Young Buffett would find out which houses along his delivery route had near-expiring magazine subscriptions and would sell new subscriptions to them on the side. Buffett declared to a family friend that he would be a millionaire by the time he turned 30, or he'd jump off the tallest building in Omaha. We, for one, are glad that he made his first million around that age. Otherwise, we wouldn't have anyone as successful to emulate when we wonder how to go about investing. By 1945, Warren Buffett was making a monthly income of $175 working as a paperboy, where he delivered Washington Post newspapers and had saved $2,000, $1,200 of which he invested in a 40-acre farmland, which we'll talk about next. Number 8. He invested in a 40-acre farm. Warren Buffett was no stranger to money, even at his young age, because not only did he deliver newspapers, but he also bet at a local horse track. And because he could not place bets due to his age, he would collect all the tickets other people threw away. He would scavenge for the discarded tickets and would have his aunt cash them in for him. When he had saved $2,000, Warren Buffett invested $1,200 of that in a 40-acre farm, where he had a profit-sharing agreement with a Nebraska farmer. He created a job opportunity for someone else at such a young age by hiring a farm laborer to work on the property, which earned him profits. He used the profits generated by his first real investment to pay his university fee and use it for other expenses. Number 7. He partnered with a friend to invest at 17. As a sophomore in high school, 17-year-old Buffett partnered with a friend to purchase a used pinball machine for $25. Buffett, with his mind spinning on how they could make money out of it, placed the pinball machine in the local barbershop. Within months, they owned more machines in different locations across Omaha, which brought in profits of about $25 per machine a week. When he bought the old pinball machine for $25, he told his friend that they could make a partnership, where his friend's side of the deal was to fix the machine, while Buffett pitched the idea to the barbers to allow them to place the machines in the waiting area, in exchange for half the profits. On the first night, Warren and his partner earned $4. After a week, he had earned $25, which he invested in another machine. He continued with that trajectory until he had 7 or 8 Mr. Wilson's machines, as he liked to call them, around town. Later in the year, they sold the pinball machine business for $1,200 to a war veteran. By this time, Buffett had earned over $5,000 from his job as a paperboy and later enrolled in the Wharton School of Finance and Commerce in Pennsylvania. It wasn't all roses for him, and he admitted to having hated it because he was complaining that he knew more than the teachers did. Cheeky one he was, right? He later discontinued his education at that school. Number 6. He made money teaching night classes. Warren graduated from the University of Nebraska with a Bachelor of Science degree. Buffett applied to Harvard Business School but was unfortunately turned down. He eventually enrolled at Columbia after learning that Ben Graham and David Dodd, two well-known securities analysts, worked there as professors. Buffett had an interest in working on Wall Street, but both his dad and his mentor, Ben Graham, urged him not to. Buffett even offered to work for Bill Graham for free, but Graham refused. So he took a Dale Carnegie public speaking course, from which he started teaching night classes about investment principles at the University of Nebraska to students twice his age. When Warren Buffett discovered that his mentor, Ben Graham, was on the board of Geico Insurance, he visited the company and talked to an executive, which left him so excited that the following week, Buffett spent 65% of his $20,000 savings to buy stocks at Geico Insurance. Turns out it was a smart move that brought him a lot of returns, and eventually, he owned Geico Insurance entirely. Number 5. He earned a salary of $12,000 a year. At this point, it's clear that Warren Buffett was a business magnate and was willing to try different investment opportunities to help him achieve his goals. He was working as an investment salesman and securities analyst, which was well and good because his mentor, Ben Graham, offered him a partnership at his Graham-Newman Corp investment firm. This is where the investment guru started earning an annual salary of $12,000, an equivalent of $109,000 in today's money. 2 years into the partnership, Ben Graham retired, leaving Buffett with accumulated savings of more than $174,000, which is equal to $1.5 million today. Buffett left Washington, D.C. and returned to his hometown of Omaha in 1956, where he used this money to start Buffett Associates Ltd. He convinced family members and friends to contribute a total of $105,000 and invested $100 of his own. But even though he invested a small amount, he would reinvest the fees, which helped him grow his stake in the partnership. By the third year of the association, Warren Buffett had doubled the partners' money. In 1960, Warren Buffett asked one of his doctor partners to find 10 other doctors that were willing to invest $10,000 per head, and a total of 11 doctors agreed to invest in his partnership. Number 4. He stayed in a modest house. Even when Warren Buffett was raking in hundreds of thousands of dollars, he was cautious about spending money on extravagant things. This is a trait he had formed when he was younger and grew up with it until it was time to purchase his first house. For a person who was earning a lot of money, he was living in a rented house before purchasing his own, for which he was paying $65 for rent. When it came to buying his house in 1958, it cost him $31,500. And you would think that now that he's a billionaire, he would live in a $7 million mansion. But no, not Warren Buffett. He still lives in the same house he first bought in 1958, and by the look of things, he's not looking to change his living situation anytime soon. Way to be extremely frugal, Mr. Buffett. Number 3. He started a Buffett Partnership investment business. Buffett made his first $1 million investment in Dempster, a windmill manufacturing company. By 1960, Buffett had opened a total of 7 partnerships and had a 9.5% stake in more than $1 million in partnership assets. In 1961, he returned to New York with his wife to raise capital from his old acquaintances, where he raised a few $100,000 and pulled in a few more partners. In 1962, his partnership, known as the Buffett Partnership, which had begun with $105,000, was now worth over $7 million. Number 2. He became a millionaire in 1962. By 1962, Buffett was a millionaire. At the time, his partnerships had over $7 million, of which $1,025,000 belonged to Susie and Warren. Buffett merged his partnerships into one organization, which he named Buffett Partnerships Ltd. The operations of the newly merged partnerships were moved to Kuwait Plaza, which wasn't a grand office, but functioned just fine for Buffett. This goes on to show that he didn't care about grand gestures. He was there to make millions. Surprisingly, just like he hasn't moved houses since purchasing his own, his offices are still located at Kuwait Plaza to this day. In the same year, Buffett discovered that Berkshire Hathaway, a textile manufacturing factory that had seen better days, was selling its shares for less than $8 per share, and started purchasing its stock. By 1964, he had taken full control. Buffett admits that after acquiring the textile firm, he realized that it was one of his life's worst investment mistakes. He felt that the cause of the textile firm's downfall was poor management and fired its former owner, but the firm was still losing money. Buffett started moving the business into the insurance sector, which catapulted it into the success it is today. As if that wasn't enough, he bought shares in Walt Disney and American Express, which reached more than $180 per share for American Express, making the partnership $20 million in profit on a $13 million investment. That's a $7 million profit. By 1968, Buffett's partnership had earned a total of $104 million. Before we get into number 1, make sure to check out the links in the description for our best recommendations to boost your savings. Number 1. He became a billionaire in '89. At 39 years old, Warren Buffett was worth $25 million. Let's not forget that he was still living in the same modest house he bought in 1958, which means that his frugality wouldn't let him change the price tag on his lifestyle. Away from that reminder, Buffett closed his partnership in 1969 and liquidated his assets to his partners. Not all that glitters is gold, because his success continued until 1974, when the stocks started to decline in price and Berkshire's portfolio began to fall, which cut Buffett's wealth by over 50%. This did not deter the Wizard of Omaha, another name he's known by, and he continued investing, eventually buying Nebraska Furniture Mart for $60 million in 1985, which turned out to be one of his biggest investments yet. In 1988, Buffett began buying stock in Coca-Cola and eventually purchased up to 7% of the company for $1.02 billion, which turned out to be one of Berkshire's most profitable investments. The following year, Berkshire stock rose from $4,800 per share to over $8,000 per share, which propelled Buffett into the world of having his first $1 billion personal fortune. By the end of that year, Warren Buffett's fortune was worth $3.8 billion. And that's how, ladies and gentlemen, Mr. Warren Edward Buffett acquired his billionaire status. It goes on to show that resilience, aggressiveness, and consistency are what build you up. Had Warren Buffett given up, he wouldn't have been where he is today. Did you know that he is ranked number 5 on the Forbes Billionaires list of 2022? Make sure to check out the next video. You're going to get a ton of value from this one. See you there.